Hey guys, welcome back to the channel McNallie Money, the official home of power mining analysis. In today's episode, Anthony Power and I are pleased to welcome Salman Khan back to the program. He's the CFO at MARA. They just came out with Q3 earnings and we wanted to dig into the numbers and talk about some of the key trends. Before we get into it, take a second, hit the like button guys, big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below if you're currently holding shares of MARA and what you thought about their earnings or results. With that being said, let's get into today's interview. All right, guys, away we go. An exciting interview tonight. Salman Khan, the CFO of MARA. They just came out with Q3 earnings. We've got a good list of questions here. Looking forward to the discussion, some of the highlights, strategy, and outlook. So, Salman, great to see you. Welcome back to the show.
Great to be back here. Thank you for hosting us.
Yeah, we're looking forward to it. So kind of the customary question, you just released earnings. Can you walk us through some of the financial operational highlights for the period?
Well, this was another great quarter for us from the perspective of breaking some records. As we had talked about last quarter, this Q3, again, record revenue for us in the history of the company, record energized hash rate at 60.4 exahash. And we ended the quarter with a record number of Bitcoin on our balance sheet, and that has continued to increase after the balance sheet period of time. So subsequent to the balance sheet period, now we're close to 55,000 coins, and it's if you think about it, almost $7 billion worth of liquidity on our balance sheet today. That includes the Bitcoin and cash. Again, we had raised a record number of size of convert during this quarter, $1.025 billion at 0% coupon. That's not due for a number of years, and that has allowed us to keep this cash on the balance sheet to do accretive transactions. I always say this. Companies who survive and you know in commodity exposed cycles, especially Bitcoin mining and oil and natural gas, are those who have strong balance sheets and who have liquidity to navigate through different market dynamics. And as we have seen fairly recently, the Bitcoin price hasn't behaved that well. It's an open secret, right? It's stayed between 125 and 100,000 now. It went down a little bit lower than that, and you know you want to be in a position where you have that option value, balance sheet is strong, and you have a long-term strategy. You're not looking for opportunistically to push your stock price up for something shiny today and regret later, but actually have a thoughtful long-term strategy and vision. And that's what MARA has been doing. This quarter was a continuation of that. And we also announced two major deals. One is the acquisition in an AI company called Exaion, which is a subsidiary of EDF. EDF is one of the world's largest utility companies based out of France. And this is a hidden gem that we are going to be, once the transaction closes, we expect to be owning about 64% of that. And that gives us that expertise of tier 3, tier 4 data center operations and managing workloads and software capability and all of the above that comes with it, right? So MARA is not just experimenting with things. We have been very clear that we like inference on the edge for a couple of quarters now, and this Exaion acquisition is one of the announcements that has come to the limelight or in the public eye, and we're excited about that piece. The second piece that we announced, which is post-quarter end, was the MPLX partnership, and this arrangement, it's a letter of intent stage today. And we expect in the next 90 days to get to deal docs, final deal docs, and get to more details where we can share a lot more information. But the reason why I personally am very excited about this is that, look, electrons are in the middle of everything that you do. Whether you are a Bitcoin miner or you are an AI company, whether it's HPC or inference on the edge, or no matter what kind of variation you like, electrons is the common theme in between. And MARA wants to hold and control as much electrons as we can. Just as a reminder, we control almost 2 gigawatt of capacity. And that 2 gigawatt of capacity that we control is low cost power, lower than one of the lowest in the sector at this scale. And with MPLX announcement, that could potentially grow this gigawatt capacity, 2 gigawatt capacity to almost 3.5 gigawatt capacity. And again, this is not happening overnight. It takes time, and we are focused on execution, focused on building this long-term vision of controlling electrons so that we can switch gears depending on what makes the most sense for us. Historically, Bitcoin mining made the most sense for us using those electrons. In future, it may be a mix of AI and Bitcoin. It may be purely Bitcoin. It may be purely AI. It all depends on what is the best use of those electrons from a profitability per megawatt standpoint and also cash flow per megawatt standpoint. And we want to be very clear that we're not going to jump on shiny objects. We have a long-term strategy. We're building this pipeline. We're building this infrastructure. And this infrastructure, digital infrastructure, is going to be significantly more valuable over time as this unravels.
Yeah, thank you for that introduction there. In terms of, obviously, you mentioned the HPC, and we'll cover the HPC side a little later in the podcast there, but obviously, from an earnings perspective, I mean, if people to look at your earnings, that the revenues you're receiving at the moment, predominantly from the Bitcoin mining side of the business, and most people, because you've got the most hash rate, would generally, I'm going to say, generally associate you as a Bitcoin miner, although this last sort of like probably quarter or couple of quarters, we've seen that sort of movement, just like, many of your peer miners there starting to look towards, achieving the best return investment for megawatts. Let's leave it in that sort of category there, because that leaves everything open to where the Bitcoin price might go or not. But in terms of the earnings itself, yes, it's a net income, positive net income there, and over 100 million. But the benefit of the FASB rules shouldn't be overshadowed. I mean, it's a paper transaction. You've got the largest balance of Bitcoin of any public company, with the exception of one, which is Strategy. And great to hear now that you're closing to 55,000, because in my calculation it was just under 53,000. So congratulations on building that stack even higher. But in terms of the mining itself, if you were to start, looking at your costs associated with mining, and you add in, even if you just add in the cost of the Bitcoin mining machines, let's not even add in the stock compensation at the moment, but if you were to add the depreciation figure, which I would assume is majority based on those mining machines, it sort of leaves the same impact as it has for most of the miners or for all the miners that have literally released their results for Q3. Even though that Bitcoin price is over $100,000, it's still a fairly challenging period to mine profitably, to cover all your costs. Now, I know people should be shouting, saying, well, they're not cash costs. Well, if you're buying machines, you're buying them with cash. You're not buying them with paper. You've got to pay for those machines. And yes, they are depreciated for a period, but the length of depreciation and the length of those machines in sort of like in usage is where sort of like the challenge comes, the unknown factor. How long are those machines going to last? Once depreciation is finished, perhaps then they become profitable to use. But I suppose my point really I'm getting to is where do you see Bitcoin mining now, and where do you see it in the next sort of 3 years as we come closer to that next halving?
Yeah, I think that's a great question, and I want to reemphasize for your listeners to evaluate when again, Finance 101, when you make economic decisions, you look at free cash flows over the life of the asset. And that's what you're alluding to. Are we generating free cash flows over a longer duration of time as an industry? And the answer is yes and no. Some companies have very high power costs and they can't generate that. We have one of the lowest electricity cost per coin. Having said that, the CapEx is important. And as you said, depreciation looks to distort the P&L from an net income perspective. You have to realize that GAAP or US GAAP requires miners to be depreciated in a certain period of time. Whereas, remember MARA's story, we are focused on, there are two things that are important. Again, talking from commodity exposed industries, I spent most of my life in oil and natural gas, and similar risk profiles. You capital intensive, commodity risk exposed, you can only control your production up to a certain extent, and you can control your costs up to a certain extent. And then timing is important, supply chain contracts are important. Those things unlock the value. Now, when we evaluate our investments, we have a hurdle rate, internal hurdle rate, which is way higher than our cost of capital. Most of the industry in this sector, whatever is left over, I should say, it's typically a high double digit, let's say close to 20% cost of capital, weighted average cost of capital. And when you look at 4 cents power that MARA has, and you do the math, it's pretty simple math. Over a period of 4 years or 5 years, these machines get depreciated much quicker from a book perspective. But from a cash flow perspective, they keep on returning cash. If you keep on operating them, they become inefficient over a period of time. Yes, you can replace them. Some companies have gone out, for example, and replaced within 2 years period of time and taken a write-off, huge write-offs. You know whom I'm talking about.
Yes.
But that to me is a very interesting financial decision, that you took that money from investors and now you're taking a write-off because you want to go to another newer miner. Our goal is different. Our goal is that we have taken this money from our stockholders. They have entrusted us with that. And we want to maximize the longevity of those miners. So we use them in our core sites, and then we move them into wind farms. And in that wind farm, that extends the life, probably doubles the life. Only time will tell. We believe it could be more than double, but it all depends on how these machines can continue to operate with that investment made 8 years ago, for example, right? So think about it from a cash flow perspective. Going back to your question, it's a pretty simple math. If it does not meet the 20% cost of capital, companies shouldn't be investing in these projects. And when we invest our capital, we are returning more than that, at least from a global hash rate perspective, and looking at Bitcoin price projections. And so yes, the answer is that yes, we recover the capital that's invested, and we also give a return back to our stockholders purely from an investment thesis standpoint. But your question is valid. Hey, Salman, if you're saying that, then why is the industry not showing profitability in the P&L? And there's a distinction and differentiation between US GAAP accounting rules, the way they're presented, they're conservative, versus your real cash flows, underlying cash flows, and those are two distinct things. Hopefully that makes sense.
Yeah. No, and I mean, the fact that the Bitcoin price has sort of steadily been doing quite well over the last few quarters has meant that, a lot of companies that have Bitcoin on the balance sheet have sort of like benefited from that positivity. I mean, if the next quarter the Bitcoin price hovers around $100,000, then I'll be interested to hear your outlook then on the fact that you'll carry that loss to the profit and loss account. And it's this sort of, I think people wanted the FESB rules in place because they were probably tired of having to show the lowest value of Bitcoin on the balance sheet that it ever achieved without showing any upside. But what you've got now is that sort of like you wanted it, now you've got it. And so the challenge is now, hopefully, if the Bitcoin price rallies every quarter, there isn't a problem for those companies with Bitcoin in. But the realism is it's quite volatile, and we know in sort of like every 8 quarters, there's going to be 3 or 4 quarters where the Bitcoin price will drop a quarter, and that way it does impact your account. So we're seeing some great results last few quarters, and all of a sudden we see this big loss because you're going to have the biggest loss along with strategy in terms of carrying that amount of Bitcoin on the balance sheet. So you are there to be seen, to be to be picked at, because you've created this enormous balance of like you say, close to 55,000. Are you are you in favour of the FESB, or do you feel it's like, well, actually, we would have liked some middle ground on it? Maybe, I don't know.
Well, look, just $10,000 change in Bitcoin price, has a $500+ million impact on our P&L.
Absolutely,
so depending on positive or negative, both ways, right? So I'm not going to discuss whether this is good or bad. That's the law of the land, so we have to comply with it from an SEC rules perspective. The good news is that all this potential loss that you're referring to, or potential gain that you're talking about, is telling the users as of that date that if MARA were to sell the Bitcoin today, then this is what the gain or loss would be. But on the flip side, we are not selling that. We're keeping that on the balance sheet predominantly. Right? Now, we do sell some to pay for our expenses going forward, but predominantly, I mean, think about it. If you have your underlying investment thesis of, let's say, 20 to 25% IRR grid connected side, right? I'm not talking about wind farms, which is completely different ballgame. It's 85% better economics than or EBITDA margin than grid connected side. I'm talking about plain vanilla industry wide 4 cents power. This is what they'll see. So 20 to 25% IRR over the life of the asset. Now, if you keep all that Bitcoin and delay selling that in the times when you're expecting the price to go up, which has been the last couple of years, just holding that Bitcoin would give you 20, 30, 40, 50, 60% IRR, depending on the time frame that you pick up. And that's the part that investors like, because it's not just the economics of an operator, but also the economics of potential Bitcoin price appreciation. But your point is valid. Bitcoin has appreciated, and lately, the last couple of, and to be clear, we were the first ones, and it requires courage. I would give full marks to Fred to stand up and say, hey, market is going to be frothy. We said that. He said that last quarter earnings release. And I know we don't want to hear that. We all want the Bitcoin price to go up, but we have to be realistic about it. And we have seen Bitcoin price has not behaved that well in the last quarter. It was the most difficult and challenging quarter for this industry from a pricing perspective. And on top of that, the global hash rate isn't reducing. Global hash rate keeps going up. So it's a double whammy from that standpoint. So it's not for the faint at heart. It certainly requires methodical investments, and also that's why a majority of the sector is trying to sign off from this. The other thing is it's a systematical shift, because you have to think, and I'm derailing a little bit from your question, why is every Bitcoin miner trying to stay away from Bitcoin mining and become something else? Primarily, it's a capital source. Because capital source in AI, HPC is people are throwing money today because there's a huge demand, right? And that's like the Bitcoin miners typically are not used to getting calls from traditional banks historically, and now suddenly they're getting these calls and they're getting this capital, and that's an easier path to go to. Now, obviously, it's not as easy as it make it sound like. Kudos to some of the companies who've done it. I know personally most of the people who have been able to pivot towards AI HPC. The challenge is going to be the construction risk, the off-ramps in the agreements. Now you're dealing with big tech. It's not going to be easy. This industry is not used to having that level of sophistication historically. And some people will be successful. I'm not saying that everyone's going to fail, but investors have to be careful in evaluating and jumping to these shiny objects, because those GPUs and the infrastructure that costs 10 to 20 times more than Bitcoin mining. And we were talking about depreciation in Bitcoin mining. those GPUs depreciate much quicker. Every year, NVIDIA is coming up with newer models. So guess what? If you are a company that is purely investing in GPUs with the hopes that you will rent it out, what's that going to do to your P&L in the next few years? Because you may be sitting with older technology, and now suddenly technology has changed. And will your customer continue to entertain that, or would they want to go and jump with the newer technology?
I know you weren't with MARA in 2021, but when we saw that initial rise in that early part of 2021, where it was like the real bull cycle, MARA were growing and had that benefit of the Nasdaq, but every miner was trying to get as many machines as possible. Do you see some sort of like similarities in that period, what we're seeing now with, like you say, people are chasing the shiny objects in terms of this HPC, or do you feel actually the fact that AI has been around for a few years and people are effectively using it every day as soon as they open their phone, their laptop, other technology appliances, or do you sort of do you think actually that let's take stock of where we are? We hope it lasts forever like the internet did, but remember when the internet came out, they said that's not going to last very long, and we're still here now using it. So, what's your theory on where we are with HPC compared to where we were maybe in the early days of Bitcoin mining, when people were chasing hash rate and paying extremely higher costs than even today for the most efficient miners today?
Yeah, look, it's we've got a lot of history with technology. Technological life cycles are very small compared to other industries, and obsolescence isn't real. I would step back and really try to reflect on NVIDIA is the biggest player when it comes to GPUs. The technology keeps changing every year or so. Newer generation of chips are coming out, right? And then you have the circular situation going on between them and OpenAI and Microsoft, and so there are very few players, and there's I'm not smart enough to predict the future, but we can look at the history of how whenever there's a few players, one reliance on one party, reliance on a few customers, what can that do in the future? To me, that's a pretty fundamental risk in the system that is built in. Now, I'm not saying that everyone's going to fail. There will be people who will be successful, and they will be able to navigate through this. And I'm not saying MARA is not going to do any of that stuff. We as I said, we have 2 gigawatt of access to electrons and capacity, and also we are going to be 3.5 with MPLX energy development, and we like that because now we're in the middle of electricity generation, and those electricity generation or consumption can be very valuable in an environment where electrons are going to be the bottleneck in the next few years. There's so much race towards building these data centers, and the electrons are limited. And guess what? I mean, coming from energy background, if you want to build a power plant, if you want to go through the interconnect studies, good luck with that. It takes 3 to 5 years, depending on the jurisdiction that you're in. And even then, you'll get slapped after 3-4 years with systematic upgrades that you need to make that had nothing to do with your project. And all these things will slow down the development of these electrons. And there was a study by McKinsey, and there are many studies out there that AI data centers are expected to, there's the investment of more than $5 trillion expected in AI infrastructure in the next 5 years through 2030. When you compare that to power, the power infrastructure is just $720 billion compared to this $5 trillion. Now, obviously, we're talking apples to oranges, but you can quantify what that $720 billion, how much power will that result in? How much time does it take to build that? That's another point. These electrons, when you start building today, it will take you 5 to 10 years to build them.
Yeah.
and I'm talking about grid infrastructure.
Yeah.
And some of them are quicker, and some of them take longer. And whereas data centers could be built in 2 to 5 years, 2 to 4 years. So there's a huge systematic disconnect, and we believe MARA is going to be in the driving seat as a result of that. Because look, right now people are jumping on these shiny objects. First mover advantage, yes, there is some, but sometimes it's better to stay calm and quiet and focus on your execution and keep building on the strength. And we believe at MARA, we will be at the center of this electron deficiency in the US and overseas, where the pricing will likely be much better, or from our stockholders' perspective, right?
Yeah, thank you.
Makes sense. Yeah, and we'll get into the generation and GPUs in a second here. I had one more Bitcoin mining related question, and I got to give Patrick Fleury credit. We were talking about this last night. We wanted to pose it to you, Salman, as MARA is one of the largest Bitcoin miners in the entire world. You just alluded to the fact that a lot of your peers have slowed growth, halted growth on the Bitcoin mining. However, we continue to see the global hash rate increase, and that has an impact on hash price, and we can get into that as well. But one of the issues with that is global blockchain security, and the idea that having national hash rate could be kind of a global or national security interest. What is your stance on that as one of the largest miners in the world? I know Fred is closely involved with the political regulatory developments as well. Have you guys talked about this, and how do you see MARA kind of fitting into that potential strategy?
Yeah, that's an important question, and Patrick is a good friend. He's a fellow energy, oil and gas background guy, so I respect what he's doing. When it comes to global and macro situation, MARA had positioned ourselves with the White House, with influencing the strategic Bitcoin reserve, and positioning the Bitcoin policy around the U.S. And that's an important aspect. And as you alluded to, it's important to have that hash rate in the United States, or controlled by the United States. And this is where MARA is in a unique position, because we've built our vertically integrated technology. We own our own mining pool. We are the only ones who say made in USA to our Bitcoin, because we own our mining pool. And none of the other miners at scale own their own mining pool. They're using a third-party mining pool, and that's a strategic benefit to us. But coming back to the question, it is very important for US to not only have strategic Bitcoin reserves, but also view the hash rate and have a stake in that. And that's only time will tell how this goes out from a long-term perspective, because look, if technically speaking, if majority of the US public companies, which is not a huge portion of the total global hash rate, if they start signing off from Bitcoin mining, we are still growing. We're not slowing down, right? We view that as an opportunity for us. We believe that we're the last man standing, and that company who is going to stand till the end is going to be the beneficiary of the whole process and the whole system. Because imagine the world where, TeraWulf, Cypher, CleanSpark, Riot, everybody else is now an HPC provider. MARA already has 60 exahash, which is the largest capacity in the US today. And we are continuing to race towards a higher capacity. But also we want to be rational. It has to be economical. It has to make economic sense. And there will be consolidation in the system, because those electrons that are redirected towards AI, those machines could be available for grab. And we've been acquisitive in nature historically, and we've been careful as to what kind of investments we make, because it has to make economic sense. Otherwise, we are better off installing our new miners ourselves, right?
Yeah, absolutely. You've already mentioned that the company is positioning itself as a vertically integrated energy and compute company. Now, can you elaborate on how you envision and Can you elaborate on how you envisage balancing the energy allocation between mining, AI inference, and grid participation so that you can optimize the best return on investment over, say, the next 12 to 24 months? How do you go through that process?
That's a great question, and right at my alley, as they say, right? So it's the question about capital allocation is really about our core business today is Bitcoin mining, $1 billion in revenue run rate with the current production, right, and current pricing, and there's diversification of revenues through AI inference on the edge that we've announced. There's electricity potential revenue from there. With the MPLX, we expect to sell power to MPLX, for example. We buy natural gas at low Waha prices, and they are, if I'm not mistaken, they are one of the lowest in the United States. And we convert that to electricity and sell that at a $45 per megawatt hour to MPLX, a portion of it, and we keep the rest of it for our own purposes, whether we sell it into the grid or to a customer, or we develop data centers, and as we had publicly alluded to. So we've got option value there, right? So if think about it from a mix of capital, our capital will, the dollars will go towards where the most economic value makes sense for our investors. As we had said, dollar per megawatt hour is important for us. Free cash flow is important for us. How do we get there quicker, right? And it could be a combination of Bitcoin mining, AI HPC, AI inference on the edge. And I say that carefully because we are open for business and we have the option value that we can go and switch. We can swing in different ways. Think about it, the baseball players listening to this, you can swing in different directions, no matter what you want. And Anthony, I know you're a cricket fan. You could be a swing bowler and hit googly and do whatever you want to with that, right?
Yeah, no, awesome. In terms of developing data centers, and we know that Fred mentioned in a number of his recent conferences that he's keen to sort of like bring sort of Bitcoin mining and data centers together to use that balancing and give the opportunity where power's not being used to utilize the miners to use up that power. Can you sort of like talk more of, that's like the theory, but sort of like in sort of maybe more practical sense, so the viewers can understand really what the direction that could look like in a scenario, for instance?
Yeah, look, when you look at AI workloads, think about using ChatGPT. Simple example.
Yeah.
If you go search something if all of us, thousands of people together in the room, start searching the same thing at the same time, then the electricity load will go up, right? Because the computers are using somewhere, and that usage spikes the electricity. If we stop using it, suddenly it goes down, right? So it is demand dependent. And this is where the grid doesn't like that, because grid wants to balance itself, and it doesn't want to have the spiky electricity consumption. That's why there's so much concern around local communities and around the grid resiliency. This is where we believe if you marry Bitcoin mining with AI workloads, and you show a baseload electricity consumption to the grid, so the grid doesn't have to worry about it, because this is all happening behind the meter, where you have a data center that is solving for AI problems. On the other hand, you've got Bitcoin mining, both of them behind the meter, and they're talking to each other and managing that workload in a way, or electricity load in a way, that the outside world doesn't get to see that. And that we believe there's tons of value in marrying them together. That's why we announced a partnership with TAE, which is an entity that Google has invested in. And we're building software that can do this in microseconds. The value is in being able to respond very quickly. And Bitcoin miners do this on a day-to-day basis with the grid. But when you marry it with AI, it has to be resilient. It has to be done quicker, and that's the piece that that will unlock value for not only the grid, the communities where we operate in, but also our stockholders, because it's a value creator.
Would you say this is a sort of like what's happening in Abu Dhabi at the moment with the mining there? It's using when the grid's not using all that energy for air conditioning to keep Abu Dhabi cool, the mining facility can sort of like switch on to that under usage of power and sort of like keep that balance out there. And do you see opportunities for that to increase, maybe not just in Abu Dhabi, but in other sort of like maybe similar climates around the world where, the last place on earth you'd expect is, Bitcoin mining in a country that's where it gets to 50 degrees in the summer, but you're managing it out there. And is this, and having had that now for well over, probably 18 months, 2 years, are you seeing, the potential to replicate that type of a business model?
100%. And when you think about, you mentioned Abu Dhabi, that gets 50 degrees C, 100% humidity almost during summertime. And there's a huge demand of electricity during that 4-month period of time. And then the rest of the year, there's excess capacity of electricity available. Same is the case in Europe. You pick up any country in the United States, in North America, in South America, in Asia, in Middle East, everywhere, the demand of electricity and the supply of electricity, there's a mismatch. And on top of that, when there has been an overbuild of intermittent renewable power, that aggregates the problem, that complicates it. And that's where Bitcoin miners go out and balance the grid. And we are a very small portion of the total electricity produced worldwide, but we help balance the grid as a result of that. And that's why governments like us, that's why Fred Thiel, our CEO, has been spending a considerable amount of time overseas. He was at FII in Riyadh, Saudi Arabia, and last week, and he has been spending time in France and Europe and UK. We have operations in Abu Dhabi and many other countries where in Africa, there's wherever we go, the governments want to talk because there's that light bulb goes off as soon as you talk about this intermittent nature of consumption with Bitcoin mining, which is very unique to BTC.
Yeah. Moving away from the mining bit, I've just got a question to ask you from like an accountant's position. So this is your personal accountant's head on there. I'm an accountant, so it's one accountant to another. In terms of looking at sort of like a strategy where you would develop your own data center, fit your own GPUs in there, can you sort of give me a balanced argument and get the risks and rewards of taking that type of business model on for a company, as opposed to sort of like maybe an option where they would bring in a client that would bring their own machines with them effectively?
Yeah, look, it's a simple math, and it's amazing to see retail shareholders doing all sorts of analysis online. You can find so many amazing models out there. It's fascinating how much people are knowledgeable about this, and it's a pretty simple exercise. You think about 10 to 20 times more expensive per megawatt capital for HPC versus Bitcoin mining, and then it takes a couple of years to build it. Then you install these GPUs that you need to probably recycle quicker than Bitcoin mining equipment, because Bitcoin mining equipment probably 4 years on average, right? This may be half of it, probably, in some cases. And then you have reliance on one big customer, right? So systematically, there's a fundamental problem. Imagine as an accountant, if you're preparing financials of your company and you have one big customer that you rely on. Imagine what that does to your financials, right? Now, that may be an investment grade customer, but if they decide to walk away, because all these contracts have off ramps, and then there's, on the other hand, you've got very strict rules around how much time, is it 99%? Is it 100% uptime? And will you be able to deliver the project timely? Are there clauses that will penalize you? Are there off-ramps if you do not deliver some of those? So there are many systematic questions around that comes to my mind. As you know, as a finance person, you have to think about the business risks. It's not just a spreadsheet. You have to think about beyond what you see on the spreadsheet. And after dancing around and doing all these things, by the way, I like HPC and AI a lot. I'm not against that. We as a company are not against any of that. There are risks associated with that. But when you put these together, the spreadsheets, your rate of returns are very similar to Bitcoin mining.
Yeah.
After investing so much money. And one of the biggest reasons why Bitcoin miners are jumping to this opportunity is primarily because access to capital. Most of these smaller players did not have access to capital as the larger players like MARA did. And now they found this lifeline and opportunity to raise the capital from sources that don't talk to Bitcoin miners historically. And that's an amazing lifeline that has been provided to some of these and extended the life of the companies. But all in all, look, from MARA's perspective, if we have access to power, like 2 gigawatt going to 3.5 gigawatt, that massive amount of power and our expectation that we will continue to grow overseas, with splitting between US and overseas 50-50 from a revenue perspective by 2028. Imagine being in a situation where you have all this electron under your control when there's bloodbath out there to get access to power. And we lock these contracts and power prices and infrastructure at a time when the inflation was lower than what it would be in future with the simple demand and supply, what it can do, right? So we are playing a long game. We are not interested in short-term headline. I'd love to have a headline, but it has to make economic sense. It has to make business sense. It has to meet our cost of capital, and all of the above.
One area I've dealt with contracts of sort of in this sort of many billions of dollars in terms of infrastructure contracts, and the one phrase that crops up all the time is payment mechanism. And these payment mechanisms are hundreds of pages long, and they will detail everything that has to be provided in that contract. And woe betide a company that doesn't meet those requirements, because that affects the bottom line then. On both sides of it, there'll be equal, delivery from both sides. But it's a challenge, and a challenge monitoring those mechanisms. Moving on to sort of, you mentioned before about you're waiting for regulatory approvals for Exaion, and obviously you'll start off with that 64% share of the company there, with the opportunity to grow that in the future should you require at a given cost price there. When do you see the technology and enterprise relationship actually contributing towards your bottom line?
Well, it's going to be as soon as we close the transaction, we start consolidating that in our financials, right? Obviously, we have been a little bit careful what we share with our investors because of the contractual restrictions that we have. I know it can be frustrating. I'm talking to our investors who feel that we need to disclose a lot more. Believe me, we'd love to disclose a lot more, but just hold on until we close, and we're happy to talk a lot more about it. What I like about Exaion is that it's AI inference. If you're Coca-Cola, you don't want to share information with PepsiCo. If you're Saudi Aramco, you don't want to share your seismic data with ExxonMobil. And the list keeps on going, right? So there's a corporate privacy and security. This company is GDPR compliant in Europe, and a tier 3, tier 4 data center. They have their own software. They have their own capability to build data centers. Very smart people, and we're very excited to welcome them in our company. And they're super excited about coming and joining MARA as well, because MARA is a technology company by nature, working under a technology, coming from an energy background myself, it's a different vibe, it's a different culture. And this is why we like that acquisition. It does not rely on one big customer. There are multiple customers. It's modular data centers, and they're sticky customers because they stick with you because you purpose built that for them, and they keep on paying. It's recurring revenue, sort of like software as a service type profile, where you keep on getting these revenues over a longer duration of time as soon as you sign them. So systematically, we like that. On the other hand, inference is the future. We believe that inference is going to be where AI is going to thrive, and we're building into that future of AI and technology.
Yeah. Now, EDF's a company that many people in the UK will know about. They operate in the United Kingdom there, so we're familiar with that from our side of the pond. In terms of having this as part of the MARA family now, does this, when you have conversations in the future about delivering further, HPC strategies, does this help having already got a partner in the group that's already delivering a type of of strategy that you want to grow for the rest of the company?
Yeah, look, if I understood the question correctly, I think you're alluding to the Exaion transaction closing.
Yeah.
So as soon as we close the transaction, they have a pipeline of inventory of things that they've been working on, just like any other technology company. And EDF is their biggest customer, and then there are many other customers in the pipeline. And we have a dedicated team that is ready to provide that support. We have governance mechanism between our joint ownership, like board with EDF and us, and there's a path to growth, which is much more well defined, like any other technology business.
I think I'm just trying to say the opposite. I think I'm trying to say them joining MARA, is that a case of they're strengthening your ability in terms of when MARA goes to meet potential customers in the future in that sort of HPC space, you've brought in expertise to help you deliver future strategy?
It's a very important question, and I'll leave you with this, because if you're a Bitcoin miner and you've been building picks and shovels, and you just hire one expert to build AI, you cannot build AI data centers with one expert. You need a team.
Mm-hmm.
And what we like about this is that we're acquiring not only a company with existing customers and growth pipeline, but also expertise to build it across the board.
No, that's that. Yeah, that's what the answer was before. Yeah, but thank you. You've mentioned about MARA Petroleum, not to be confused with MARA itself, and their
Marathon Petroleum. Yeah.
Sorry, Marathon Petroleum, not to be confused with your company. The initiative to pair the natural gas and create electricity. What milestones should investors expect during 2026? And how do you plan to manage the execution risk across multiple integrated power sites?
Yeah, so we've been building a power team internally over the last. Remember, our evolution just 3 years ago, we were an asset-light company.
Yeah.
And then we bought almost close to a gigawatt power capacity, and now we own and operate 70% of our capacity. And we've built our teams around operations, people who can watch things, do things very efficiently on a day-to-day basis, uptime, making sure the hash rate hours are maximized from a shareholder value creation standpoint. So take that same approach. We've also built there. When you look at our team structure, we've got energy experts who have built power plants, operated power plants. Then you have traders who are experts in trading electricity. I'm talking about the energy side. Obviously, we've got the asset management BTC side, but the electricity side. And then you have the data center team that is focused on managing data centers on a day-to-day basis. Then we also have a very strong origination team that goes out and originates projects and interconnects and things like that. So all in all, we're building this team over the years that can build real asset portfolio for MARA. That's why we call ourselves MARA Holdings. We hold assets, whether it's Bitcoin or it's energy assets, or it could be something else in future, data centers, miners, perhaps GPUs one day, if that makes sense. But we like ASICs a lot.
Yeah. One question before I get you to wrap up is you've mentioned about you want to the goal of achieving this 50% of revenue from international operations by 2028. What are the key regulatory or geopolitical risks that you potentially foresee as you pursue this goal?
Yeah, look, when we look at international operations, we think about going to countries that are stable, that are friendly to the United States, and there's lower geopolitical risk across the board, right? So our operations in Abu Dhabi is a testament of that. We announced regional headquarters in Saudi Arabia and Riyadh, and also in France. Paris, France. So, we are systematically growing into, and then we have attracted some serious talent. For example, the President Macron's special envoy on electricity and energy in general, Gerard Mustorlet, he's joined our team, and he's advising us in that region. So we've got some serious talent that we have built across the board who understand geopolitics. You've seen our government relations team, who've done a phenomenal job over the last 2 years, helping shape the policy of this industry across the board. And that's a testament of the kind of people that we attract, and we're very proud of that, because MARA is all about attracting the right people, buying the right assets, and building the right assets, and throwing all these great talented people to make the most value out of it.
I was on a panel with Kevin Deedy from H.C. Wainwright back in March, and the question that came across was, what do you find is the most important part of a mining company? And his answer was the management team. And I think he was quoting MARA, actually, and looking how they built this team up, and what you just explained there about making sure you've got the right people in the right place. Let's hope that drives through to 2026 and onwards, and delivers the results everyone's expecting you to. Thank you.
Excellent. Thank you very much. We're very proud of it.
Yeah, we appreciate the time. If you guys have any additional questions, make sure you hit them in the comment section below. Feel free to subscribe to the channel. Salman, always great to see you, and we'll catch you guys back here tomorrow.